So long-term investing, the characteristics we have: buy and hold strategy. You're buying and holding for at least 3 years. Like I said, 3+ years. I'll consider that a long-term hold. You're focusing more on fundamentals and long-term growth within the company, and that often involves dividend reinvestment or index fund investing. So that involves investing in ETFs and in doing the fundamental research that we talked about in the fundamental analysis, and seeing how strong a company looks to you long term based on their income versus their debt and all those things we went over in the fundamental analysis lesson. That if you missed that, make sure you go back to watch. Okay. The pros: there's less time intensive. You could sit there, you could do your research on a long-term stock, and then sit and grow your position over that time frame, that long-term position. You don't have to sit there and watch the stock every single day, gauging the stock price movement, because you know you're in it for a long-term position. Historically, you want to make sure that you get into things that have historically strong returns. So S&P 500 usually returns at least 10% return on your investment annually, which is pretty decent. And investing in that for 3 to 5 years, you're going to see an average return on your 5-year investment for about 10% a year. The last 2 years in S&P 500 has actually been 20% years. But like I said, the average is 10%. So that means we can have some years that are going to come in that are going to be lower coming forward. Okay? And benefits from compound growth and dividend reinvestment. You have stocks that pay you out dividends. So some stocks pay you out dividends quarterly. Some stocks pay you out dividends monthly. Some stocks pay you out dividends yearly. But as those dividends pay out, you would collect them and hold them as cash in your account, or you have them reinvested back into the stock that's paying you the dividend.